Hi friends, good evening. Welcome back to my YouTube channel. Today I'm going to talk about fundamentals of account and which debtors, debts and different types of debt. That is a good debt. What is meaning of doubtful debts? What is the accounting treatment and how it will impact our financial statement? And next is bad debt. What is the meaning of bad debts and how it will arise when the company will create the bad debts and what is the impact on the bad financial statement? Which financial statement? It can be financial statement called profit and loss account and balance sheet. That we're gonna talk about in details few years further. And the provision for doubtful debts, right? What is accounting treatment provision for treatment and why we need a company need to create the provision for doubtful debts. Okay, let's talk about the every business is required. A purchase and sales are the most common and the most important activity which will attract and connection between the lots of people, either giving the benefit or taking the benefit. What is the data then? Debtors are those entities which will delay in the payment or creditors will allow the credit period or pay later. Let's talk about with an example. For example, a company sold goods to Mr. X on credit basis. What is the journal entries? For example, transaction example sold goods on credit, right, to Mr. X of rupees 10,000. Just this is an example, right? Accounting business. What is accounting is analyzing, identifying, recording, right. Identify the two aspects. What is the debit and credit aspect? That is Mr. X is there and sales are there. When they are passed on and comes under which account? Personal account. What is the personal account is talking about? Debit the receiver, record it. So Mr. X account that are to sales. Why sales is credit? Sales come. What is the nature of sales? It's a revenue for the company, and the revenue comes under which account? Nominal account. What is the nominal account rule? Credit all incomes and gains, and hence sales is an income to the company and credit. Let's record it. Sales account 10,000 debit, 10,000 credit. Being narration is important to understand the business transaction, why it is recorded, right? Being goods sold on credit, credit to Mr. X, right? This is an example to explain what are the debtors, how it will arise. How it will arise? When company is selling the goods to Mr. X on credit basis. Say for example, between the company and Mr. X, this is a company, company A sell goods to Mr. X on credit basis, say for example 2 months credit period. That means there is a time gap 2 months in this example. There is a time gap between the sales or purchases to recover the money from the customer or payment of cash to the creditors, right? There is a time gap. In this example, that is a sales example, between the company A and Mr. X, there is agreement within 2 months. Mr. X has to pay back to the company 10,000 is called debtors, right? This is called debtors. What is the nature of debtors? Current assets, right? I'm just touching the basics. What is the current asset meaning? Current assets are those assets which need to be which can be converted into cash or cash equivalent within the 12 months of period is called current assets. Understand? Yes. Current assets are very important to the business. When we are talking about the working capital, I will touch in the future that very interesting topic. If the current assets are more or less, what is the business impact, that we'll talk about. Let's talk about the current topic now. Come on. Okay, this is the data. This is how we'll arrive. When the company is selling the goods to the customer on credit basis between agreement, that's where the debtors will arise. Understand? Now let's talk about debts. What is a debts? Again, same concept. Debts is amount which will be receivable being a goods supplied or service supplied to the company on credit basis, right? This is called debts. And again, there are three different categories of debts. One is good debts, doubtful debts, bad debts. Let's talk about good debts. What is the meaning of good debts? A good debts are which can be received by the which definitely received by the company from the customer, right? Neither there is no possibility of bad debts, nor there is no doubts in its realization is called good debts. As such, there is no provision required in this situation. What is the provision? The provision is the amount which will provide the a future loss, right? What is the purpose of provision? Why company is creating provision, that I will talk about later. Well, you understand, right? What is the good debts? The good debts are neither there is no possibility of bad debts, nor there is no doubt in its realization. That means company sold goods from Mr. X 10,000. The total amount of 10,000 will collected from the customer is called good debts. Right? Good debts means whatever company sold to Mr. X, that will collect by the company. That means customer will pay back to the company. Now let's talk about doubtful debts. What is the meaning of doubtful debts? Doubtful debts are which will be receivable. Doubtful debts are which will be receivable or cannot be ascertained at the time of preparation of financial accounts is called doubtful debts. That means when my financial accounts are preparing on certain period, this 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 amount of doubtful debt cannot be certain is called doubtful debts. Then what is the accounting treatment? How it will be treated? We cannot call it as a loss for the business. As such, we cannot write it up against to the financial statement, but it will be charging to profit and loss account. What is the journal entry? What is the journal entry? What balance will reflect doubtful debts? So provision for doubtful debts will always show the credit balance. What is journal entry? Profit and loss account, data to provision for doubtful debts account, right? This is the entry. I will talk about when I am talking about the example, the problematic, you will understand better way. Let's focus on the concept now. That is called doubtful debts. Now bad debts. What is that bad debts meaning? A bad debts means a company cannot be recoverable from the customers. It cannot be realized from the customers. Right? It's called bad debts. That means when for example, in this example, company sold goods to Mr. X on credit basis. That means it cannot be recovered from the X person in real life also. Mr. X has given of rupees 10,000 to Mr. Y, and Y has agreed that he will pay back to the Mr. X within 2 months, but he will never pay. That is called bad debts, right? In the same way, in company's perspective, when goods are selling to customers on credit basis, but agreed between the company and the customers, but he will not pay it. Not the all the amount, but based on the past experience. For example, in a particular month, the total sales value is 10 lakhs, 1 lakhs, for example, 1 lakh rupee, right? So based on the past experience, there is a 2% bad debt will arise. That is a past, based on the past experience. Now, a total of my sales is in particular month is 1 lakh, and based on the past experience, 2% will bad debt will arise. Now my total bad debts is 2 ones are 2. So 2000 This 2000 rupees. This 2000 rupees is a bad debts. Right? This is called bad debts. So that bad debts, what is the nature of bad debts? It's a loss for the business. Right? It is a loss for the business. What is accounting treatment? When there is a loss comes under which account? Loss comes under nominal account. What is my nominal account rule? Debit all expenses, losses, credit all incomes and gains, right? Now, since my debit is my bad debt is loss, and given example, the example was 1 lakh of rupees credit sales, and based on the past experience, 2% of bad debts, right? Total bad debts is equal to 2000, right? This 2000 is called bad debts. This is how bad debt will arise based on the past experience, and the percentage base company will calculate the bad debts, right? That means, no, sorry, I'm sorry. Based on the percentage will calculate a provision for doubtful debts, right? Based on the my past experience, doubtful debts will create, right? But the bad debts, this is how bad debt will arise. Means a certain amount of goods sold to the customers, but ultimately it is not recoverable or collectible from the customer is called bad debts. The bad is the nature of bad debt is nominal account. What is a nominal account? Debit the losses. That means what is journal entry? Bad debt account, debtor debtor to debtors account, debtors account. In the example 2000, right? That means my bat is a loss for the business and it will directly impact the P&L account. Now I have created in the few previous example, debtors is a debit. Debtors, what is the nature of debtors? It's a current assets. Current asset means debit balance. Now since it is not received certain extent of amount, and hence I have created the credit. Decreasing. Debtors are decreasing. This is account. How it will impact? For example, this is of my P&L account. P&L account, debit, credit. So this is credit side is my revenue, debit side my all expenses. P&L account, nominal account base, all expenses debit, all incomes and gains credit, right? So my bad debts will come here, bad debts, right? Debit side. That means this much of extent my profit will reduce. When the profit will reduce, what is the other impact in the balance sheet? My capital also directly will impact, right? Okay, let's talk about provision for doubtful and debts, right? What is the provision for doubtful debts? Why the purpose of creating the provision for doubtful debts? Because to reduce the actual impact of the bad debt loss, right? So again, as per the based on the past experience, the certain percentage in this example, say my total sales in the particular month is the 1 lakh, and based on the past experience we may arrive the bad debts of 2%, right? On that basis, that provision will create. Why provision will create the company? To reduce the actual loss from the bad debts. Going beyond the concept, for example, I have sold 1 lakh rupees in the current month, and I have created. Why we need to create? As per the matching concept, right? If I sold my 1 lakh as revenue, what is the total expenses is incurred? That means revenue and expense are recorded in the same accounting period is called matching concept, right? But imagine the sales are the goods are sold to customers, and the customer will not pay in the future certain amount. When the customer is not paying, that means bad debt, we will call it, we are treating as a bad debt, right? When there is a bad debt, my P&L will directly impact. My P&L will directly impact on net profit. When there is a decrease in the suddenly decrease in the net profit, All of the sudden my shareholder will ask to the management of the company, hi boss, why profit is reducing suddenly by this extent. Government will ask. Just an example, what imagine if the bad the data is collectible amount is more, and there is not collected, and when the company is not creating the provision for doubtful debts, my profit will suddenly decrease. When the profit suddenly decrease, all of the sudden shareholders, stakeholder, government people will ask the company of the management of the company. And that's why the other way around, other than the concept, right? The company will create the provision. Company management can show to the reader of the financial statement, hey boss, we have created a provision in the so and so period, because based on the experience we have a 2% of the chances of arising the bad debts, and hence now it has arrived, we have charged the bad debts again to P&L, and hence it is a decreased. That is the impact of the bad debts. Right, I hope this will make to understand what is a bad debts and how it will be treating. And I will gonna explain with a detailed way, with the best example. Please do watch my YouTube channel. Thank you very much for watching. Bye.